All right, I'm going to go ahead and start sharing my screen, and it is 10 o'clock. I know it's a little bit early, but I mean, it's right on time, but there's a lot of information to share. So I want to respect the time of those who joined right at the right time. So welcome to StartupSac Office Hours. This is our emergency relief edition. And for those of you who are not familiar with StartupSac, StartupSac is a nonprofit that works with startups in the greater Sacramento region to help them get connected with the resources that they need to help them be successful. And once a month, we hold office hours, which is usually a casual in-person meetup over lunch or coffee where people can come and just get to know us and get connected to the Sacramento startup system. But there's so many questions out there right now about emergency relief that we decided to repurpose our April office hours as a special session on emergency relief. Let's see. Now I can't figure out how to, oh, there we go. Okay, so the rules of engagement is to please mute yourself and stay muted for the time being, unless Miss Laura invites you to ask a question. There will be, actually I just updated this. We're gonna hold all Q&A until after all the presentations. So write your questions down, or you could submit them in the chat, but we'll get to them after everyone has done their presentations for a couple reasons. One, your question might get answered through the other presentations. Plus what I found in other presentations is people start you do the presentation on the EIDL or EIDL loans. People start asking questions about the paycheck protection, et cetera, et cetera. So we'll just do them all at the end. There's a function to raise your hand if you have a question to ask, and I'll show you how to do that a little bit later on. Disruptors will be booted, so zero tolerance for Zoom bombers. And Jeff Bennett, the CEO at StartupSac, yes, we might not even give you a warning. We might just kick you out if you seem like you're here just to disrupt the meeting. And all materials presented will be emailed to you after this meeting has ended. In fact, I already have it set up to go out at 11:30. So for those of you who are new to Zoom, how you raise your hand, if you move your cursor down right now to the bottom of the Zoom window, this bar should pop up. If you're not already seeing it, there's one that says participants. And if you click on participants, then this other window pops up and there's a little icon that says raise your hand. So when we're in the Q&A portion, you can raise your hand and I will call on you to ask your question and unmute you at that time. So I want everyone to keep in mind that this situation is very fluid. I was mentioning to people who joined a little bit early that I've been on at least one meeting a day that about the financial relief that's available. And I mean, it is changing more than once a day. So I don't know how many applications now there's been, how many revisions to the application there's been for, I think both the Paycheck Protection Program and the SBA emergency loan, or the EIDL or EIDL. So keep that in mind. From what I'm seeing in the news lines, like everyone's worried that all the funding's going to run out. It may, but there are some things going on at the federal level to try and make more relief available. The state of California is looking at what it needs to do, and also some of your cities are doing things as well. So before we get into the other presenters, one of the things that I had said we would talk about today was the process for filing for unemployment for the self-employed. That was part of the CARES Act that, for example, what people call independent contractors or gig workers, that they would be able to file for unemployment. Unemployment is managed at a state level, and I did a Google search for the last 24 hours this morning, and this is the only thing I found is that on April 7th, which was a day and a half ago, the California EDD said that the self-employed and those who are truly independent contractors should not yet file unemployment claims because the state agency still hasn't established the program needed to channel the federal money to them. So the only way you can file for unemployment right now is if you're actually an employee or if you have been misclassified as self-employed or independent contractor by an employer. So in other words, you shouldn't be applying yet, and stay up to date on that. Okay, and then I wanted to let you know that the next presenter, well, these are our presenters right now. Sunita, not sure why I have a comma after your name, but Sunita Maharaj, who's the Assistant Director of the NorCal SBDC Finance Center. She's primarily going to be talking about what we're calling the EIDL loan, or the Emergency Disaster Recovery. She'll tell you all about it. Eric Grabin is Small Business Development Officer at Safe Credit Union, and he's going to talk about the Paycheck Protection Program. And then Ray Loyd is a partner in the assurance services at Ernst & Young, and he's going to talk about some of the accounting or financial recommendations or cautions, whatever you, so we'll get to him. And then Carrie Ellingwood is not going to present, but she's going to be here to help answer any questions that come up. Carrie is the lead lender relations specialist with our local, I'll call it our local chapter of the SBA. So we have a good crew of people here who are giving us their time. Most of these people are working like 12 and 18-hour days, both trying to help you individually, participate in conferences like this, and also stay up to date on the ever-changing regulations. So I want to give them a round of applause for being so generous with their time today. So I'm going to stop sharing, and I'm going to invite Carrie, or not Carrie, Sunita, to share her screen. Let's see if that works.
Laura, I have sent you the updated file.
Yeah, do you want me
so that you can share it? Yes, please.
Okay, all right.
Thank you.
All right, go back. Okay, so one note, I cannot see, whoops. Okay, I don't think I did that right, hold on. I want to share that.
Sorry, I've had issues with my system.
So Jeff, I just want you to know that I can't see, while I'm sharing my screen, I don't really see a lot of what's going on in Zoom. So if something happens, you'll have to.
Okay.
Perfect. Good morning, everyone. Laura and Jeff, thank you so much for inviting me to participate in this. I am with the SBDC in the NorCal area. Northern California SBDC is supported by the SBA and the state of California. We do provide no-fee advising for small businesses, for startups, existing businesses, all types of businesses, for profit. The Finance Center is who I work with, and we specialize in getting loans for small businesses. The director is Scott Rogalski, and I'm sure some of you know him or have worked with him in the past. Myself, my name is Sunita Maharaj, and I am the assistant director as of just a few days ago. So happy to be here. So we'll go to the next slide. Disclaimer, just like Laura said, honestly, things are changing so often. We try to keep as up to date as possible. One thing that we are finding now is our clients are giving us the best up-to-date information possible. So when you do become a client, we do ask that you share information with us as well on your process, how things are going. Another thing, disclaimer, check the site on a daily basis. I would in the mornings to see what changes have come about. You can also check with the with your advisor if you do become a client of ours. Next, please. What is available for you in loans? So there is the SBA Direct Idle Loan, which is the disaster loan. They're also calling it the idle loan, and also the advance of the up to $10,000. I think there's been a misinformation in regards to everybody gets $10,000. It is up to $10,000. And I'll let Carrie take the questions at the end on that, or else I can also answer the questions. But from the new information that we have, and Carrie can jump in if this is not correct because things do change often, it is per employee. So if you have one employee, you get $1,000. 2 employees, you get $2,000. If you have 10, 20, 30, 50 employees, you get the $10,000 from what we have just learned, I believe yesterday, the day before. And if that is incorrect, Carrie, please let us know. So that is in regards to, yes.
So this is Carrie, and I wouldn't say it's exactly per employee. There's the calculations that they use of they kind of have a algorithm. So I would say it's more along the lines of that's one of the bases, and then it goes into the other information that's provided as well as the credit score. Okay, perfect. So then there are different layers. So it's not everyone gets $10,000 as I believe a lot of people were thinking in the past. SBA supported PPP loans, which another presenter will go over that in depth after this presentation. California supported sales tax deferment. We'll go over that as well. California iBank loan guarantees, and also the microloan guarantee. SBA Bridge Express loan for $25,000 if your lender participates to do that. We're just finding it a little bit difficult to find lender participation. And then SBA current loan support. The SBA will pay the principal and interest of your current 7A loans for a period of 6 months. Lenders should be reaching out to you. A lot of my clients have already received letters from their lenders letting them know that this has already gone into effect as of this month. If you have not received a letter yet, I would reach out to your lender. Let's see here. We'll just go on to the next screen. Economic injury disaster loans, which is the SBA idle loan. How much to apply for, what you need to keep your business open for the next 6 months. So working capital for the next 6 months. I know there's not a place to put that on the application, but what we have heard, and if things have changed recently this week, what we heard is this is the calculation that they're using to get that number. And they will reach out to you and I believe go over all the numbers with you that you provide. Right now the application is simplified, so they just want to get your information into the queue and on to the next level. If they are requesting additional documents, then they will send you an email and request exactly what it is that they need. Eligibility, businesses and co-ops that have 500 or less employees. Some nonprofits, 750 employees or less. Some ag co-ops, sole props, and independent contractors are also eligible for this idle loan. How long it takes? The up to 10,000, as far as we know so far, and Carrie may enlighten us a little bit better on this because things do change all the time, between 2 and 3 weeks, which is fully forgiven if loan is approved or declined. The rest will come within 35 and 45 days, which is the best case scenario. Next, please. So California small business support. So we have also California iBank supporting small businesses. There's a new fund that just came out, and it has not been, it has been vetted, but we still are waiting on which community development financial institutions will be the ones to underwrite these loans. It is up to $50,000 that you can receive from this loan, and it would be guaranteed by the state of California, unlike the SBA loan where it's guaranteed by SBA. As soon as that information comes out, we will get it to you right away, because this definitely is something that is needed. Another caveat on that is they want to see that you've tried to apply for SBA and you possibly did not get approved. They're just going to ask for a letter confirming that from the client. They're not asking it from SBA. So that is a little caveat to that. The disaster state guarantee loan up to $1 million and a 95% guarantee to the lender. That is also, so you can get a loan to continue your business for the next 6 months, the next year. That's what they're looking at. And there are certain lenders out there that are within the guarantee program. And we can send out a list of that. And then it's also on the iBank website on who are the participants, lenders that participate with that. There's also the sales tax deferral, allowing small businesses to defer payment of sales and use taxes of up to $50,000 for up to 2 months. There are other caveats on that, and I'm just getting more information on that. So I apologize if I don't have additional information other than that at this point in time. So that pretty much is it for me for the EIDL SBA loan. I was going to go into the PPP loans, but Eric Grabin is going to do that. And from the glance of his slides, it looks like it's going to be awesome. So we'll save the questions and answers until last, like Laura said, and thank you very much.
All right, thanks, Sunita, great job. Let me pull up my slides here. Yeah, so just to reiterate, everything that everybody's saying is they are constantly changing daily. This is a program that we tried to roll out as soon as possible for our members as well. And we've been inundated with non-bank members, consumer members that don't have a business relationship with us, existing business members, et cetera. And as you can imagine, putting together a program within about a 24 to 48 hour notice is a little bit difficult to do, but we're managing as best as we can. And I think it's obviously a little bit easier for the larger institutions to get on board and roll this out with their infrastructure, but I think the community banks and credit unions are doing as much as we can as well. So for those of you that have applied with a financial institution, hang in there, have some patience. I know we're all trying to do everything that we can to make this as easy and streamlined as possible. So I guess I'll just go over a quick overview of what we're going to be talking about. I've got some comparison charts in here. Laura, Jeff, thanks for putting this together again. I think it's important to share what everybody's experiencing, as well as highlight the programs as well, so that everybody's aware of what's available to them. We're also going to go over, Sunita already covered the EIDL loans. I'll be talking a lot to the Paycheck Protection Program, and then we'll follow up with questions at the end here. So I thought that this was a very useful chart. This is a chart that was shared with me from the Coleman report, which is a report for basically commercial and SBA lenders. The only note that I'll make on this one here is the interest rate. So this was shared, I think, the day before the program actually rolled out. The interest rate on the PPP loans has changed, as you may have heard. The application's changed, a few times as well. So the interest rate is currently at 1%, and Other than that, I think for the most part, all of these parameters are fairly accurate. So, and I think Laura's going to share these slides afterwards for everybody. So here's really the two differentiating parts of the PPP versus the EIDL loans. The Paycheck Protection Program is designed for payroll expenses, and we're encouraging you to use the use of proceeds for at least at a minimum 75%, and that is some of the forgiveness information that's included in that. So even if it's even if it turns out that it's not a forgiveness or there were any mistakes or anything like that in the loan application, we're still looking at a very low interest rate of 1%. And I know that they're talked about no payments for 6 months and then a term of 2 years, which is, as you may know, very attractive as far as terms on a loan just in general. So very minimal information that we're collecting in order to underwrite and approve these deals. And I'll just continue on here. So as far as eligibility, it's pretty simple, very generalized. If you have 500 or fewer employees that reside in the United States, you're eligible. If you have a small business, which is defined by SBA, you can look up those rules. There's a ton of resources as far as that. This also extends to nonprofits, a 501c3, veteran organization businesses, 501c19, and tribal businesses, as in Section 31B2C of the Small Business Act. So you do have to have been in business as of February 15th and had employees and paid salaries or payroll taxes. Individuals who operate, and I know Laura wanted us to stress the importance of more of the sole proprietorship and independent contractors. They are eligible. In fact, that part of that program rolls out tomorrow. And same eligibility. You have to be self-employed before February 15th. As far as ineligibility, what would make you ineligible for this loan are as follows. Obviously engaged in activity that's illegal. Household employers such as a nanny or a housekeeper would be ineligible. If the owner of 20% or more of the equity is incarcerated on probation, on parole, or have had a felony in the last 5 years, you or any business owner had controlled or have obtained a direct loan from the SBA, as this is a guaranteed loan from the government, have not defaulted within the last 7 years and caused a loss to the government. Pretty simple and straightforward there. As far as documentations, and this is tailored to the sole proprietor and independent contractors, payroll processing records, if you do in fact have those, if you have any employees, or you're paying yourself off the payroll, payroll tax filings, Form 1099 MISC, income and expenses. So I would say, as much as possible, ensure that your financials are current. And I think that this is where Sunita and her group can help out a lot as well. I know for a lot of sole proprietors, independent contractors, we don't always file our taxes or put our financial statements together monthly or quarterly, but it's important to have these dialed in and complete and put together, because these are the documents that we're going to be relying on for the approval and the underwriting of these loans. So we'll be asking for supporting documentation. Also, I know a part of the forgiveness is after the following, I think it's 6 to 8 weeks after the loan has funded, we'll be reaching out for the supporting documentation, bank records, to show that those funds have been used for payroll. So keep that in mind as you're going through and filling out the application and calculating your loan request.
Eric, could you go back?
Yes.
Go back one slide. So
Mhm.
some of our people are sole proprietors and independent contractors. Some of them have startup businesses. As far as the documentation that's required for those who are not sole proprietors or independent contractors, this list doesn't really change except for Form 1099 isn't relevant. Is that correct?
Correct. Yeah, we'll be asking for payroll processing records, and those should also be breaking out as far as any sick leave, medical leave. They are also asking for insurance payments that's paid on behalf of the business, retirement benefits that are being paid on behalf of the business as well, to be included in those calculations. So those are other forms of benefits that can be rolled into this program. Okay. So, oh, here we go. I guess this next slide here answered your question, Laura. So here's what we would qualify as payroll costs, right? So compensation to the employees, salaries, wages, commissions, cash tips, equivalent, payment of vacation, parental, family, medical, or sick, allowance of separation and dismissal, payment for the provision of employee benefits consisting of group health care coverage, including insurance premiums, retirement, payment of state and local taxes. Keep in mind that they're not including federal taxes on that, okay? And then same reiteration down there at the bottom. So I think that answers your question from the previous slide there, Laura. So this is the way that they're calculating the maximum amount that you should be borrowing, or could borrow, I should say. Basically, you're walking through these 5 steps here. Laura, one thing that I didn't include that I can send over to you afterwards, hopefully before your email goes out, but it's just a quick Excel calculation sheet. It's something that we're using to basically assure that we're coming to the same calculations as those that are applying. Quick down and dirty, it says the forms that we're going to reference that you should be referencing as well. And it shouldn't take more than maybe 5 to 10 minutes to input and help speed up that process when applying. And here on the next screen is just a quick example for that calculation, right? So I tried to tailor this a little bit more to sole proprietor with no employees making more than 100,000. This is more, I would say, maybe different smaller startup type, right? But maybe you have an annual payroll of 120,000. Maybe you have one employee. Maybe that one employee is yourself. Your average monthly payroll is divided by 12, so that gives you about 10,000. Easy, quick multiple of 2.5 times is going to give you that 25,000, and that would be the maximum loan amount that you would be applying for. Just quick, simple. Like I said, we're not, it's not pulling out all those health benefits and that kind of stuff, but I'd say that's probably more common with these smaller startup type businesses getting off the ground. So here's what I recommend as far as keys to maximizing your loan approvals. Make sure that you're eligible. Let's see, I can't see behind this part here, but checking with, let's see here. Oh, let's see if I can move this out of the way. Checking with your primary financial institution. We are, as much as possible, redirecting everybody that doesn't currently have a banking relationship with SAFE to the primary financial institution. I understand that, there are some larger financial institutions that are turning people away because they've capped out or maybe turned off their lending as of right now. But there are some other non-bank lenders, more transactional lenders, locally and nationally, that are approving these PPP loans as well. So if you are finding that your primary financial institution is not able to help currently at this time, there are resources out there, and maybe there's a list. Actually, I know that you can go to the SBA website, and it has a list there as well. So gathering the requested documentation, making sure that you have all that stuff put together so that you have it accessible, because we're going to ask, most lenders are going to ask for that ahead of time and have you upload that or circle back and ask for it in another 6 to 8 weeks as well. And then taking the time to calculate the loan correctly, I should say. I've seen a few applications that have already come in where they try to throw it together as quickly as possible because they wanted to get in line per se, and some of the calculations, I don't know where they've come up with those numbers. So, going back and having them take a little bit more accurate reading, going through the Excel spreadsheet and calculating those numbers correctly so that we're all on the same page. And then, submitting your application, supporting documentation, and keeping those detailed records on that payroll afterwards. So I'd say that that's it. And everybody, I know everybody's experiencing similar issues. So if you have any questions afterwards, I know Laura's happy to share my contact information. And I've probably got 5 minutes in between calls these days, but I'm always happy to answer questions.
Laura, you're muted. There you go.
Eric, can you stop sharing your screen?
Oh, sure.
Oh, actually, I can do that.
There we go.
All right. I'm going to just reiterate something for those who joined us late, since we got started right on time. All right. I'm having difficulties. Let's see. Slideshow. Can you see it as a slideshow right now? Or does it just look like my...
You need to hit the up in the top bar, the little presentation icon up in the orange section up above.
On the right?
Over on the left.
Sorry,
there
guys.
you go. There you go.
Okay. So I just wanted to reiterate for those who joined after we said this, regarding unemployment for the self-employed, that is a process for applying for that has not been set up yet by the California Employment Development Department. So stay tuned on that. You should not file an unemployment claim if you're self-employed or an independent contractor yet. All right. So now we're going to move on to Raymond Loyd, partner at Ernst & Young, and get some financial considerations.
Okay, great. Thanks, Laura, and good morning, everybody. Happy to be here. My name is Ray Loyd. I'm a partner on the audit side, the Sacramento office here. Been with the firm for 26 years, going on 27, and serving startups all the way to big international companies, so the whole range. And just happy to be here to help, in this uncertain time in any way we can. So, Laura, if you can just go to the next slide. I do need to start off with a couple disclaimers and disclosures, legal definition of who we are, copyright protections, and that third bullet there that, really the views expressed, are my personal opinion and, meant to be educational, not necessarily the views of the firm. And so, Laura, next slide. More disclosure, basically, I'm going to be talking a little bit of tax, which is dangerous for me as an audit partner. I'm going to talk about some financial reporting considerations. Again, this is all meant to be educational, and facts and circumstances are specific to every individual company. And so, really, this is not intended to provide any advice for tax or accounting. Thanks. So, I just wanted to hit this at a very high level. I'm sure that the primary interest, right away is, how do I get the money? And I think the prior two presentations were excellent in laying out what's available and some of the framework for how to go get the emergency relief that's out there. You know, a couple of financial considerations I did want to run through, and there are a lot. Our clients are dealing with a lot right now, you know, not just with the emergency relief, but with COVID-19 and the impact of you know, the pandemic and what's going on with the economy. And so, you know, there's a lot that really what I've tried to do is just boil it down to a few considerations, you know, that really should be top of mind for companies receiving government assistance. And you know, I'll go through those at the 100,000 foot level, and then we'll have time for questions. But really at the overall level, you know, you probably saw from the prior presentations, this isn't free money. There are restrictions, there are conditions, there are covenants, and you really need to make sure you understand and get your arms around what those are. You know, because as Eric had indicated, you know, 6 to 8 weeks, you're going to be looked to kind of prove out what you've done with those funds. You know, there could be IRS audits down the road, financial audits, you know, which really leads into that second point there. And I do think Eric covered this pretty well, as also is just records retention and documentation. You know, getting and keeping contemporaneous documentation is just key to you know, making sure when the questions get asked down the road, you've got that evidence and information already in place, and you can demonstrate how you complied with the provisions of the loan or the grant agreements. Want to walk through a few tax items. Again, I'm not a tax partner, although Laura, Jason Peterson is a tax partner from our office. He was able to join this call, so if we do have any specific tax questions that come up in the Q&A, I may want to call on him to help out, and he texted me he's happy to do that. You know, and these bullets, just again to reiterate, this is just a very small subset of, you know, the number of issues that are tax related that come out of you know, all this with the CARES Act and all these emergency relief efforts. So, you know, getting professional tax advice, working with your advisor is just critical to make sure, A, you're going to maximize the benefits for tax and down the road, and, you know, B, that you're just staying out of trouble, because nobody needs trouble, any more trouble than what's already going on. So leading into that, there are research and development credits out there, and you know, as companies continue to spend money on research and development, especially startups, getting a process in place and working with your advisor on how you capture those credits really should be top of mind, and don't lose sight as we're going through this pandemic crisis. And then just getting into some of the federal and state stimulus that is out there, much of this in the form of you know, credits that will come through your tax return, and the various loan protection, payroll protection programs that were already discussed. You know, these first three here, payroll protection, retention credits, and Social Security tax deferral. What's really important to just keep in mind as you go into this is that some of these can be mutually exclusive, meaning you get one and not the other. And so again, just critical that you're working with that tax advisor that you have to make sure you're figuring out which one is beneficial and how you maximize the benefit of all the credits that are out there. And then lastly, on tax, states, if you operate in more than just California, you just need to know what's going on state by state and keep abreast of the states that you're operating in. As has been mentioned a couple times, things are changing, rules are being put in place. They're already talking about more stimulus, you know, at the federal level. States are talking about it, so you really just need to keep your ears open and pay attention to California and then any other states you might be operating in. And then finally, just you know, for those that get the funds, there's you know, I think as Eric mentioned, banks are looking at getting your financial statements, and they want to see, the information. And, so once you get this relief assistance, any governmental assistance, you really just need to be careful that you're evaluating whether it's in fact a loan or a grant. Because we've got some of these, they start off as loans and then they get forgiven if you meet certain criteria, so it becomes a grant. There could be grants that if you don't meet the criterion, you're going to have to pay the proceeds back, and then it becomes a loan. So you really just need to understand the substance and the time frame that you're working with, and make sure. I would say if you're not sure if you've met the criteria to keep that money, it should be classified as a liability on your financial statements. And again, get that documentation, understand what the requirements are, and then once you've determined it's something that does not need to be paid back, then that's when you can look to actually recognize that in your financial statements. The second point there is, once you determine it won't need to be repaid back, it's generally, unless you're a not-for-profit, and I don't know if there are any on here, but for most for-profit enterprises, or those seeking to make a profit, it's not going to be considered revenue in your financial statements. And, it could be grant income. What we're seeing with some clients, if it's not directly related to income tax, a lot of these, even though they're tax credits, are going to be applied maybe as a reduction to the payroll expense that they're intended to help out. So that's one consideration. You pick a policy. You can go either way, whether you call it grant income or a reduction of the related expense. But pick your policy, and then just think about, there could be a time frame that you earn that over as well. And so it may not just go all to your income statement right away. So Laura, I think with that, those are kind of the top of mind things that I just wanted to put out there, and then we can open it up for the Q&A.
Yeah, and I wanted to point out, from what I understand, that the IRS hasn't really given guidance yet on how they want to handle forgiveness. So I'm thinking we probably have another seminar later in the year for anyone who got a loan on how to handle it for tax purposes. So
yeah, well, and I'm sure, as Jason would probably attest to, oftentimes these things are put in place so quickly, the rules and the interpretations, still need to come out from the various taxing authorities. And so a lot will be changing over time.
This is Jason. On the PPP loan, the forgiveness was specifically called out as non-taxable from a federal standpoint. So that is actually written into the law. But states have yet to jump on board and or issue guidance as to whether or not it will be non-taxable from a state income tax perspective. So just be on the lookout to see whether or not states comply or don't comply. In my professional opinion, I think that most states are going to comply and conform to the state non-taxability of that loan forgiveness, but it's a wait and see.
great.
Thanks, Jason.
So the process for asking questions, and it can be on anything we presented today, is that we're going to ask you to raise your hands using the Zoom raise hands feature, which, just to remind you, if you move your cursor all the way to the bottom of your screen, there's a toolbar that shows up. Click on participants, and then there's a little icon to raise your hand. And Jeff and I will call on you and unmute you. Jeff, I'll try and do that myself, but if it seems like I'm getting frustrated or far behind, you can help me out.
Okay. Also, there's a couple of questions in the chat. I don't know if you've seen that yet.
Yeah, I did see that, and I'm going to ask on their behalf because they're both related. And these, I think, both have to do with the Payroll Protection or Paycheck Protection Program, or the PPP or the PPP. But one question, I'm going to read both questions, and then whoever feels like they can answer it, please do. With sole professionals, it may be we don't have W-2s or salaries. How do we get a loan? And then the second question is, What were the considerations for self-employed again? I saw commission. Are there other considerations as far as calculating payroll? So I think, and I'd also throw out there on this, I know some who are self-employed do a draw, and I think I've heard a draw does not count as a payroll expense. But anyway, let's let Carrie or Eric or Sunita answer that question.
Yeah, Laura, I can talk to that one. Basically, the way that I am seeing that is that if they're not paying themselves a payroll or they don't have any employees, is that basically we're using their net operating income as far as that, because that's the way that it would be coming back to them as far as their net income on their Schedule C.
Okay, hopefully that answered that question. Next question, Mark Anderson, and then Paul Sathis will be after that.
Hi, thanks for doing this. Are there any tips on the PPP program? Since some lenders are having issues, if you're not clear whether you're getting any traction with one lender, are you allowed to go to multiple lenders, or did you have to just pick one and go there? Can you apply at multiple banks?
Okay, so who would like?
I can
Laura,
I can
go
answer
ahead.
that, unless Carrie wants to.
either way, go ahead.
So I was just going to say, I have heard of borrowers applying at multiple institutions. I personally think that if you are working with a financial institution and you're already in the queue, you should be fine. But like you said, Mark, I think most people are having issues, or they're just not getting the timeline of what to expect or how fast it's going to be processed. I read an article last night of a borrower that had applied with 5 or 6 different institutions, and then she was going to call back all the other lenders after receiving approval from one of those. I don't think that that's the best. It's just going to delay all the other lenders from, circling back and saying you're approved and sending out documentation and things like that. I could see a lot of issues or hemorrhaging in those pipelines that are feeding through that. But I'd be curious to hear your thoughts too, Carrie.
Thank you, Eric. Yes. So take it off speaker. So what I know today, we got some information that there are now 3,450 lending institutions that are using the Payroll Protection Program. We had 178 new lenders join SBA to participate. As of last night, there are 400,000 applications in the system that the lenders have put in there, and there's about $100 billion in loan guarantees out. So with $300 billion allocated, we are encouraging people to first go with their current lending institution. A lot of this changes daily. We have on our website at sba.gov a tool where you can put in your zip code, and it'll tell you which lenders in your area that are participating. And I would echo Eric's comments about not having too many applications out too many places. That will make it more difficult for our lending partners, who are doing an awesome job, by the way, shooting at a target that changes every day. We do appreciate their flexibility with getting this program out. Just to put it in perspective, it started on April 1st and it's now April 9th, and they've already been able to get out that $100 billion in loans across the country. So, please, I would say, work with your primary lending institution. Most of them are working to get on board with this program if they're not already in the SBA program. And regardless if they're currently a preferred lender or not, once they join in for the Payroll Protection Program, they will have the same access as a preferred lender. So in this particular situation, that isn't necessarily an advantage one way or the other for the financial institutions.
Thanks.
All right, so Paul's next. Then I have a question from Alicia, and then Errol. It'll be your turn.
Okay, so hey, thanks guys for putting this on. It's really helpful. I know my sister's going through a issue, and she's been completely confused about all the programs, so this is great. I heard what Laura said about as a sole proprietor, which I am, hold off on unemployment if I'm going to do it because there's more news coming as soon as tomorrow. On the loans, we talk about, you know, forgivable or forgiveness. And, you know, in the world of college tuition financing, there's loans and grants. A forgiven loan feels more like a grant, and it obviously sounds more preferable to me. And you could say, well, looking for free money, but the reality is there has been, you know, economic damage over the last 2 months for a lot of folks, and I think that's what they're trying to mitigate. So, would you actually be going into, if you did something now, would you be taking out a loan, period, end of story, that might get forgiven, but you just don't know? So you'd be kind of signing on that bottom line without knowing. Is that what I heard accurately?
Okay, maybe Carrie can answer that. The question is, are there loans you can get that you don't know if it's going to be forgiven or not?
Or the opposite, are there loans that you would know for sure up front before you sign that would be forgiven, for instance?
So this is Carrie, and what I know about that is they don't call them a grant because you do have an application process and you do have requirements that you meet in order for them to be forgiven. So if you, let's say, have a loan that's, we call them forgivable, and you don't meet the conditions of that loan being forgiven, then you would not be able to have it forgiven. The only loan in this program that I'm aware of at this point is if you apply for and receive an EIDL advance loan, and you can do that and then prove those expenses were expended and those things were done. That loan also is forgivable for up to $10,000 per business. Did that answer your question?
So there's only one that has a chance of being forgiven, I guess, which is, and you called that an EIDL, say again?
The EIDL, EIDL advance, and that's up to $10,000 per small business. The Payroll Protection Program, Eric spoke to that in terms of the requirements. So I would refer back to his slides because that is forgivable, but there's things that you have to meet in terms of conditions to have it forgiven.
Eric,
Okay,
do you
thank
want
you.
to talk about what those conditions are briefly? Or
Yeah, I think it more or less has to do with 75% of those loan proceeds to be used towards payroll expenses. And if you are doing that and you can demonstrate and show that those source documents to prove that, then it should be forgiven. At least that's the way that I am understanding that right now.
But there's a time limit on that, right? You have to do that within
correct
8 weeks of receiving.
Correct. Yes, that's correct. And the other part that that we had been discussing as well was that you know, say you have more proceeds than you're able to use, you can apply that back to, if it turns out to be a loan, let's say, you can apply that back towards that loan to pay down. There's no prepayment penalty on that. So you, in that sense, you wouldn't be borrowing more than you needed to.
Okay,
Right.
thank you.
I'm going to move on to Alicia's question, and I'm going to ask that for her. She put that in the chat. And oops. Okay, so her question is about startup companies that don't have a year's worth of records for themselves and do not have revenue to get paid from yet. So basically pre-revenue startups who've been in business for less than 12 months, do they qualify for any of these programs? And if so, how might that be different from others? So Sunita, do you want to answer that one?
Sure. So you would have to be able to document what your operating costs were to stay in business. You also have to be able to qualify for a loan, such as idle. For the PPP, if there were no expenses, then it'd be difficult to apply for that. For the idle, if you have documentation, and Carrie can speak to this as well, we tell people to apply and let SBA make the decision if it is if it's going to be a loan they can or cannot do. Things do change all the time, but if you have zeros across your profit and loss statement, then yes, it's going to be difficult to get money because you have to show something, some sort of income, losses. How did COVID hurt you? What was the disaster?
Yeah, and I had heard it explained with the idle, for example, that that's for operating capital and it's not for loss of future earnings.
Revenue, correct.
Yes. And that was a good explanation of that, Sunita. But again, when you apply for the idle loan, it is, they may or may not decline you, but you might as well put that application in there for that idle loan if you can give the information that Sunita mentioned in her response.
All right, next question is from Errol. And you've been unmuted, Errol. Are you still there? Errol. Okay. All right. Seems like Errol's not there, so we're going to skip.
I think he's trying to ask Errol. He was muted and unmuted, so I'm not sure.
He is not. He's not muted at the moment, from what I can tell.
Okay. Okay.
Errol, going, gone. Okay. All right. So there's a question. I didn't see another raised hand, but I've got a couple online questions. Chase wants to know, what can you do if your current bank isn't SBA accredited? Banks such as SAFE aren't allowing new members to apply for the PPP, only existing members pre-COVID-19. I think we answered that. I think Carrie said that there are a number of banks coming on board, new banks as of last night, close to 200 new banks. And then we also shared in the chat a couple of online banks, Lindustry and Safe Bank, was that the other one? I shared those links. Smart Biz Loans was the other one. Yeah. Go ahead, Carrie.
Yes. Oh, thank you, Laura. The on the SBA website at sba.gov, there is a tool where you can put in your zip code and it will bring up the lenders that are participating in the program, and that's updated regularly. So if, let's say you looked yesterday and your lender wasn't on there, then you could look again today and see possibly if they have decided to participate in the program. We're onboarding new lenders as quickly as we can. We've simplified the process for them, and hopefully your lender will join in.
And I've shared that link to find by zip code a few times in the chat now. So the next question is from David. He wants to know, for the PPP, how is payroll calculated if you are a sole proprietor with 2019 net income of over $100,000? I believe Eric answered that. Basically, your payroll becomes $100,000. You can't apply for more than $100,000. Is that correct, Eric?
Yeah, there's actually a calculation of discounting that over $100,000. And I believe that's included in that Excel calculation sheet that I sent over. If you don't mind sharing that out to everyone, it should be able to provide them with a good number for that. So to answer their question.
Okay. All right. And okay, so a question from Michael is SBA the lender for the EIDL loans? And yes, they are. You need to apply online at the SBA site. Carrie, do you want to answer anything else on that one?
You did a really good job. That's correct. They just go to sba.gov. It's the first thing on our homepage. It's going to say apply for disaster assistance, and it'll list all the different options.
All right.
And Laura, I did want to throw out there too that we have SBDC advisors that are proficient in this and can walk everybody through it. So just as long as you become a client, there's no fees associated with what we do, and we can help everyone walk through the process of the PPP and also the EIDL disaster loan.
Okay. All right. So, Errol, I'm going to give you one more chance. Are you there? Would you like to ask a question? Oh, we can't hear you. Okay. Type it in the chat. Okay. All right. Other than, I don't see any hands raised. Do you see any hands raised, Jeff?
There's another, no, that's all for hands. There's another question from Alicia in the chat. Is the FTB allowing deferment of payment of all fees, including sales tax and startup fees, like the annual fee?
TB.
Franchise Tax Board, I assume?
Okay, does anyone have any answers about California state income taxes, the franchise tax board? Is there any?
I don't have an answer. Hi, Laura, this is Carrie. I don't have an answer per se, but I would recommend they go to the ca.gov website, and they have what they're doing listed on their website.
Yeah, and Laura, unfortunately, Jason Peterson, our tax partner, had to drop. But you know, I was going to recommend the same thing. I think there's a lot of good information that I've used personally, just on that ca.gov FTB site.
Okay. So it is 11. We're going to stay on for longer. If our presenters can stay on for longer, that's great. If you need to leave because you have another meeting, we understand as well. But we'll stay on a little bit longer. I do have the question from Errol. He wants to know if for recent startups, those started in 2019, bootstrapping with no net income yet, it looks like PPP is not an option. Is that right? And I think we did answer that question that for PPP, which is the Paycheck Protection Act, that's for protecting payroll expenses, basically. If you have no payroll expenses, you can't get a PPP loan. Is that correct, Eric?
I'm going to say yes, Laura. However, I will note that the Paycheck Protection Program also includes rent and utilities and mortgage interest. But again, that component, they don't want to exceed any more than 25% of the proceeds. Otherwise, it won't be forgiven. So in that case, it could possibly be used for as a loan proceed on that side. The EIDL loan, I was going to say, does incorporate some of those accounts payable and that kind of stuff as far as their use of proceeds. So that may be a better fit. That's where I would recommend maybe working with Sunita to go through those expenses and with a fine-tooth comb and see if there's any opportunity there.
Okay, so Sunita, would you add to that? My understanding is the EIDL is working capital based on your operating expenses, and you might qualify for that if you have spent any money on your startup.
Correct. Yes, absolutely. There's calculations that we don't know about, that they look into, but there also should be some sort of net income because you're going to have to pay this back. So they need to figure out historically, have you made enough money to be able to pay the loan back as well, as far as I know at this point in time.
Okay, so the next question I see is from Eagle Eye Realty. The question is, if you are a home-based business, can rent be used on your home as an expense? I heard the answer to this question yesterday. If you're, and I'll let the tax people go for this, but if you're legally using, putting with the IRS, or if you have expenses related to home office that you're filing on your tax return, and it all qualifies based on that, then I think yes. Would someone else like to answer that question?
That's correct. It has to be on their taxes for them to take that. So you have to be able to show that your taxes that you took that rent or lease or something like that, and they'll probably divide it out by 12, and that's what the amount that they'll give you is what is on your taxes.
All right.
Hey, Laura, there were a couple of questions up higher than that one. David asked, is there any reason why you wouldn't apply for both the EIDL and the PPP program?
No, you should, if it is up to you. I know a lot of people are going towards the PPP because it can be forgiven if you follow the rules and, you know, after 8 weeks, and make sure you have everything documented. And I want to reiterate that as well. Documentation is going to be key for you to be able to get that money forgiven. EIDL is a loan. It's a loan at 3.75% for 30 years. So you just have to figure out what is going to be best for your business. You can apply for both. If the EIDL loan comes through, you end up getting the money, and you decide at that point in time that you don't want that money, then you can always decline it.
And then a question from Mary.
Excuse me, Laura. On the EIDL loan too, just so people are aware, the new EIDL loans, once that's dispersed, the payments will not be required for the first 11 months. And you don't have to make your first payment until 12 months. And as Sunita said, there is no prepayment penalty. So let's say you use your Payroll Protection Program loan for your payroll and expenses that are allowed, and then you had additional expenses such as you needed more inventory or supplies or whatever it is, and you have the EIDL loan that isn't approved in conjunction with it. You just want to make sure you use the EIDL loan for the other expenses and you know, keep those records really clear, as Sunita mentioned.
Okay. All right. So then a question from Mary is, if you are a pre-incorporated startup paying contractors to build early product, does SBA provide any assistance? Who would like to field that one? So your operating expenses basically is paying independent contractors. What I heard yesterday is that the independent contractors would need to apply for PPP themselves. Does that sound true, Carrie or Sunita?
That is from, this is Sunita, that is what I also heard.
And hopefully, you know, the big day is tomorrow when self-employed, independent contractors, freelancers, whatever you want to call yourself, sole proprietors, are able to file for PPP. That's what the federal government says. I don't know if they'll actually have everything figured out by then, but anticipate there'll be more information available. So someone else wanted to know if I'd send a recording of this. If I set everything up right, yes, I will. Plus I'll be sending the resources. You'll get one email coming out at 10:30. It may or may not have the Excel spreadsheet that Eric was talking about. If I don't get it incorporated into that one that goes out at 11:30, I'll send it to you right after. Okay, Jeff, do we have any other questions that you've seen?
That's, I think, the last one that I've seen in the chat box.
All right. Anyone else have another question? Either raise your hand using the Zoom tools, because I can't see all the windows at once, or type it in the chat box.
Hey, Laura, this is Sunita. I'm so sorry, but I'm going to have to get off the call and go on to another one. So I appreciate everyone's time. Thank you very much. And again, just let us know if we can be any help.
And then I wanted to let everyone know, and I'll try and send you this information as well. The SBDC is having a call every day at 10:30, or not every day, Monday, Wednesday, Friday at 10:30 a.m. It's a Zoom webinar meeting I'll send you the link to that as well. And they're going over what's changed and what is new information. So you might want to tune into that tomorrow. It's harder to ask a question there because they usually have like maximum number of attendees, like over 300 attendees. And they're doing that as a webinar, but they've been really good, Scott and Sunita and other people, about sharing what are the new updates. Okay, I don't see any more questions in the chat, and I don't see anyone with a raised hand. So Jeff concurs with that. So I want to thank everyone for attending. Now that you've attended this webinar, we'll probably add you to our StartupSac mailing list, so you'll find out other things that we're doing. Maybe you want to check out 1 Million Cups on the next Wednesday. But be safe and hang in there. We'll see you all next time.
Thanks, guys.
Thanks.
Thanks, Laura.
Thank you. Bye-bye.